Welcome back to Market on Close. I'm Marley, Kayden in Chicago alongside Sam Vadas at the New York Stock Exchange. Some final thoughts on today's session. For me, the U.S. trade deficit came out totaling $901.5 billion for 2025. That was only slightly narrower than the $903.5 billion the year before, despite our ongoing tariffs. Exports rose 6.2% to $3.43 trillion, but imports climbed to $4.33 trillion, pushing the goods deficit, that's the piece that's most impacted by tariff policy, to a record $1.24 trillion. December alone saw the deficit jump nearly 33% to $70.3 billion. Now, the full effect of tariffs on the trade gap remains uncertain after a very volatile 2025 that saw U.S. companies stock up on foreign goods ahead of the new duties taking effect, and uncertainty that's still lingering around trade policy. But we did see mortgage rates hit their lowest level in nearly 4 years this week as the benchmark 30-year fixed rate dipped 8 basis points to 601. The 15-year fixed rate also eased, falling about 9 basis points to around 535. Now, this pullback led to an uptick in refinancing applications and is giving many prospective home buyers a rare break heading into the spring market. Economists are attributing this slide in borrowing costs to shifting expectations about inflation and the Federal Reserve's interest rate trajectory. Still, housing market activity does remain muted. Sales are stuck near multi-year lows as affordability continues to be a problem and limited inventory continues to weigh on both buyers and sellers. I was very data-driven today in my takeaways. Sam, what caught your eye during the session?
Well, I think, Marley, just a lot of the conversations we've been having about these markets. I mean, we continue to see this internal tension in the markets while largely treading water at an index level. I mean, James McIntosh over the Wall Street Journal today calling the market, quote, weird, saying it's highly unusual that the market sectors should diverge so much, yet the index stays so stable, the S&P 500 just a couple of percentage points or so from its high. I asked Elizanne Saunders about the churn under the surface today, and she puts it down to the broadening out we've seen in that rotation just not moving in a linear fashion. She says there's so much money in the market right now that has a short attention span. We've seen these whip around rotations as part of that, and that's been part of the AI cascade, she calls it. But she says that the process of rotation is not a bad way to actually correct some of the excesses, whether it's sentiment or valuations, and expects some of that churn to continue. So I think that's really interesting as we continue to see this bifurcation, that rotation out of some sectors, particularly technology, into other corners of the market, Marley. But heading into tomorrow, what will you be looking out for?
I'll be looking out for the PCE numbers, Sam, of course, coming out tomorrow. Expected to have ticked up in December. Forecast predicting PCE prices likely rose 2.8% over the past year. That's the same as the annual increase we saw in November. Core PCE, though, which excludes those volatile food and energy prices, is forecast to rise 3%, up 2.8% from November. Now, that would put both measures of the Fed's preferred inflation gauge slightly higher than where they were in January of 2025. If we meet expectations here, it could dampen some of this market optimism that we're seeing after last week's CPI data showed signs of inflation slowing in January. So that will definitely be a potential catalyst tomorrow. What will you be watching?
Yes, absolutely. Other than that, we've obviously got the Q4 GDP print. This is going to be important, particularly off the back of some of the numbers you were just running us through with respect to the trade balance. There is an expectation that that pullback in exports may actually drag on some of the growth that we saw in the fourth quarter. So let's see how much of that is reflected. But no doubt we're expecting another quarter of growth, but at a slower pace compared to the previous quarter, though enough to keep some of those recession conversations at least at bay for now. And then, of course, Marley, we do have the next chance for SCOTUS to rule on the fate of Trump's tariff. So let's see what they say, because, I mean, this could move the markets quite significantly if they are overturned. We'll be waiting.
Certainly could. And I do want to note Live Nation has started trading after hours after the halt. They are up 3.75% following their earnings. But that is going to do it for us today on Market on Close.